So in today's video, I want to go over what is happening with GameStop, what is happening with Wall Street Bets, and how this David versus Goliath story, how it's happening right in front of our eyes. This is an historical moment and I want to be a part of it. So before we jump right into this, don't forget to smash the like button, and there's gonna be some free stocks down there in the links in the description if you want 4 free stocks from Webull, 1 free stocks from Robinhood if you guys are brand new to the stock market. So now let's jump right into the story. This is a historical moment in time. This is the first time for me personally in the last 3 years that I've been investing that I get to be a part of an epic short squeeze. And there was a lot of money made from retail investors, and there was a lot of money lost from hedge fund managers. So this is how my portfolio is looking like on the day, $94,000. My goal here is to get to 100K as fast as possible, and I'm doing that by buying as much Alibaba as I can. So Alibaba here sitting at 260. I just bought 10 shares today. And that is my Alibaba update. But the main attraction of the story today is GameStop. So GameStop on the day opened up at about $100. And if you are brand new to GameStop and you don't know what is going on, basically GameStop, has been dying for the last 5 years. So, 5 years ago, this is what the chart looks like. GameStop was worth about $33 a share. Over the years, people stopped going to malls. People started downloading games online, so they lost a lot of business. And GameStop basically crashed all the way down to about $4 during the pandemic of 2020. And only in the last few months that GameStop has finally turned around. And now GameStop is sitting at $88. So earlier today, GameStop went from basically $100 all the way to $159 all the way at the top at $10.40 today, and the shot back all the way down to $72. So this is what happens when so you can kind of call this a pump and dump. All right, so I do feel bad for anybody that bought at the top at $159 and sold at at $72. That's like what, 50% of lost value there. But for anybody that's still holding, there still might be some money to be made here because there's still a lot of short sellers in the market. All right, so let me try to summarize everything to make this as simple as possible. All right, so hedge fund managers, some ways that they make money is by short selling a stock. So they make a bet against the company because they think the company's not going to do well. And short sellers, they try to drive the price of a company down. And the lower that the company price goes, the more money they make, and vice versa. So if the stock price goes up, that means the hedge fund that is trying to short sell, they're going to lose money. And that is exactly what happened today. So this is Wall Street Bets. Wall Street Bet is basically a bunch of retail investors like me and you. We have maybe $1,000 to hundreds of thousands of dollars to invest. And we invest in what we like. So this community has about 2.2 million readers. And currently today, right now, as we speak, there are over 200,000 people on here. So just imagine the power of 200,000 retail investors working together, talking about what they want to buy and everything. So if you're watching mainstream media, they're going to say, Wall Street Bets is a bunch of, degenerates. These guys don't know what they're doing, but most of that is true. But these guys found an opportunity to get back at the big guy. So let's take a look at this tweet here by Will Mead. This kind of summarizes things up a little bit. Retail investors basically just shut a hedge fund down. All right. Citadel and Point72 are investing, backstopping $2.75 billion into Melvin Capital, who was a Superman short GameStop. Melvin is down over 30% in 2021. So for the short squeeze that's been happening over the last few weeks, this hedge fund has basically lost 30% of their entire capital, of their entire business. And in my opinion, these hedge funds just got way too greedy. And Wall Street Bet saw that as an opportunity. And if you guys see anything in the mainstream media today or the next few weeks, they're gonna probably spin it the opposite way. They're gonna say, Wall Street Bet, these retail investors with only like thousands of dollars to invest that just lost their job, that are just sitting home because because they're not essential employees, they're gonna say these guys are manipulating the markets. Where I think, and in my opinion, the hedge fund managers are the ones that have been manipulating the markets, especially with GameStop. So this guy is the legend himself. This is the middle part of his name, I can't really say, but this is Deep Something Value. This is his position, and I think he's the one that's You could call him the leader or the one who has the the most to gain and the most to lose. So he has about 50,000 shares, price paid $14.89. He has 800 call options here. So each contract here is worth 100 shares, okay? So he has 800 call options, and he paid a price of 31 cents for each one, for each share. And right now his position is valued at almost $14 million. And I believe his initial investment was somewhere close to $50,000. All right, so this is from my understanding here. So let me give you some examples of what I'm trying to say. All right, these are the most shorted stocks on the stock market as of today. Last updated January 25th, 2021. So at the top here is Gamestop. So when I say these hedge funds are really greedy, look at this. Float 250%. Shorts percentage of shares short, 97%. And there's a lot of other companies here that are talked a lot about on YouTube, on Wall Street Bet as well. We got Bed Bath & Beyond. These guys are, shares floated 76%, so not as bad as GameStop. Fubu has been talked a lot about. I've seen this one going around. Shares floated 62%. And all the way down here, we got Macy's, shares floated at 39%, but Macy's is one of those companies that are doing really bad. But when it comes to GameStop, there's 100% of shares out there, right? And these guys are shorting even more than 100% of the shares. Think about that. In my opinion, that's just pure greed, and now they're paying for it. So one thing that I always like to say is history always repeats itself, right? This is what happened before my time of investing. This happened in October 2008. So if you're really young, you probably might not even remember this at all either. Hedge fund loses $30 billion on Volkswagen's infinity squeeze. So infinity squeeze is basically the ultimate short squeeze. It's like the highest level. And that could possibly happen with GameStop as well. Volkswagen is a car manufacturer. If we take a look at this article, Volkswagen and this squeeze was considered the mother of all squeezes. All right, imagine a hedge fund losing $30 billion. $30 billion in 2008 was worth a lot more than $30 billion in 2021. This short squeeze that I'm telling you made Volkswagen the most highly valued company in all of the entire stock market for that one day, for like a short period of time. All right, this drove the price past thousands of dollars. An orchestrated squeeze on Volkswagen shares caused Volkswagen to briefly become the most valued company in the world, worth more by market cap than ExxonMobil. ExxonMobil is a company that I own a lot of shares in today, but at that time, ExxonMobil was the most highly valued company. So from what I'm seeing, I don't think that this GameStop short squeeze is over, because there's still a lot of shares floated. And if we take a look here, I think this is where we're at right here. This little dip here, this is where we're at with what's going on now. So potentially, all right, I'm not trying to predict what's gonna happen, but this giant spike here, this infinity squeeze could happen with ExxonMobil, and a lot more hedge funds could be losing a lot more money over the next few weeks. So I'm getting really excited right now, and I kind of want to take things back a little bit more before I give you my final thoughts. This is the financials of GameStop, and this is what some analysts are targeting the price of GameStop here. So GameStop, Finbox fair value is sitting roughly around $40. Some analysts targets it at around $12. There's an upside of negative $42. Uncertainty is very high. I completely agree with this. Uncertainty is very high. If we take a look at some of the historical financials, you can see, the revenues declining over the last few years. You can see operating income has been declining. We can see net profits declining. Everything is looking pretty bad, but there is a turnaround story there somewhere. The turnaround story for GameStop is starting with Ryan Cohen. This guy, he was the founder of Chewy. Chewy is an e-commerce store where you buy subscriptions from them, and they send you foods for your cats and dogs. That's what I use for my cats, and I have 2 cats, so they send me a lot of food every single month. So in this turnaround story, Ryan Cohen, he was the founder of Chewy, and he bought about 13% of GameStop, and this is where it all starts. So Chewy has a market cap of $42 billion. All right, so this company is worth a lot more than GameStop. Compared to their peers, they're worth a lot more as well. Their peers are worth like what, 200 million. in the sector itself is worth about 47 million. So this guy basically hit a home run with Chewy. And, you know, there's a really big bullish case that you can say he might be able to bring back GameStop as well. And that's why a lot of Wall Street bettors are betting on this stock. So even though there's weak numbers, there's weak fundamentals for GameStop, everyone is really playing the story here. Everyone is ignoring the fundamentals and they just want to get in where they fit in. And me personally, I want to just be a part of this, all right? I want to be a part of this David versus Goliath story. I think if the infinity squeeze continues to happen, a lot of more hedge funds that are trying to short GameStop is gonna lose a lot of money. So, you know, I might buy a few shares just to say I own a few shares of GameStop and I was part of history. So my channel is more about dividend investing, conservative investing, and for beginners, I don't think they should even go anywhere near this stock. But, you know, just for the novelty of it, just for the, you know, historical value of it, I think personally for me, I just want to own maybe 1 or 2 shares just to be a part of history. So that's my take on this GameStop epic saga. And so if you guys want to see more videos from me, go check out these videos here about other investing strategies. And don't forget to like, subscribe, hit that notification for more content just like this. Follow me on my Instagram where I'll probably make more videos about GameStop. Follow me on my second channel if you guys want to see Cash App videos. And I'll see you guys in the next one. Thanks for watching. Bye.